What if Bitcoin became the world's reserve currency? It's a question that feels almost like science fiction, but at the same time, it's one of the most debated scenarios in finance and technology today. To imagine such a world, we need to step back and understand what a reserve currency is. For decades, the US dollar has held that role, serving as the foundation for global trade, central bank reserves, and international financial settlements. Countries rely on it for stability, oil is priced in it, and entire economies are tied to its value. Now imagine if Bitcoin replaced the dollar in that position. How would global trade look? How would banks operate? And how would governments respond? At first, the shift would be seismic. Unlike traditional fiat currencies, Bitcoin has a fixed supply of 21 million coins. That means no government could print more of it during a crisis, no central bank could inflate it to manage debt, and no political decision could change its scarcity. For businesses and consumers across the US, the UK, Australia, and Canada, that would mean living in a world where money holds its value in a way that fiat often doesn't. Savings would be shielded from inflationary policy, but flexibility during recessions would disappear. In such a world, governments would lose one of their most powerful tools, monetary policy. Trade would also undergo a radical transformation. Today, international payments often flow through a network of banks, clearinghouses, and institutions like SWIFT. Transactions can take days, cost significant fees, and be subject to geopolitical restrictions. If Bitcoin became the reserve currency, those same transactions could settle nearly instantly across borders with no middlemen. A US company paying a supplier in Australia wouldn't need to convert dollars to Australian dollars through an exchange rate. It would simply transfer Bitcoin directly. In theory, that could reduce friction and lower costs in global trade. But there's a catch: Bitcoin's volatility. If Bitcoin's price swings continued at their current pace, businesses might face serious challenges managing risk. A shipment negotiated at one price could be worth significantly more or less by the time payment settles. For Bitcoin to function as a reserve currency, it would likely need far greater stability, either through mass adoption, smoothing out volatility, or through sophisticated financial hedging systems. Banks, too, would find themselves in unfamiliar territory. Right now, commercial banks create money through lending, multiplying reserves into loans, mortgages, and credit. With Bitcoin as the base layer, money creation would be much harder. Banks wouldn't be able to simply print Bitcoin into existence. They would have to operate more like custodians of a scarce digital asset. Lending might shift to collateral-backed systems, where borrowers lock up Bitcoin to receive credit. Interest rates could be set by the open market rather than central banks. For everyday people, that might mean tighter access to loans, but also greater transparency, since every unit of Bitcoin would be accounted for on the blockchain. Governments, especially those of the US, UK, Australia, and Canada, would face unprecedented changes. The United States, in particular, would lose the immense privilege of issuing the world's reserve currency. Today, this allows the US to borrow cheaply, finance deficits, and exert enormous influence over global markets. If Bitcoin took that role, American policymakers would no longer have the same power to sanction countries through the dollar system or to manage the economy through the Federal Reserve's actions. The UK, Canada, and Australia, though less tied to reserve status, would also have to adapt. Central banks would likely transition into purely regulatory bodies rather than monetary managers, overseeing the integrity of financial institutions, rather than setting policy through interest rates or quantitative easing. On a societal level, life would feel both simpler and more rigid. Imagine earning your paycheck in Bitcoin, paying for groceries in Bitcoin, and saving for retirement in Bitcoin. Cross-border payments would be seamless. You could travel from New York to London to Sydney without ever worrying about exchanging money. But governments would no longer be able to devalue currency to make exports more competitive or inflate away debt. Countries with high debt burdens might face painful adjustments, as they could no longer rely on printing money to manage repayment. Instead, they would need to live within stricter fiscal realities, balancing budgets with far more discipline. One of the most striking effects would be on global inequality. For decades, developing nations have struggled with unstable currencies, often pegging them to the dollar for stability. If Bitcoin became the reserve currency, those countries would have direct access to the same neutral money as the wealthiest nations. That could level the playing field, giving people in fragile economies the same monetary foundation as those in London, Toronto, or Los Angeles. On the other hand, countries with less access to technology or reliable internet infrastructure might find themselves disadvantaged, unable to participate fully in a Bitcoin-based economy. The geopolitical landscape would also shift dramatically. Reserve currency status has always been tied to power. The British pound once held it, then the US dollar, supported by economic strength and military might. If Bitcoin took over, no single nation would control the reserve asset. Instead, the power would lie in the network itself, decentralized across miners, nodes, and holders worldwide. That might reduce geopolitical leverage for countries like the US, but it could also reduce the risk of one nation dominating the global financial system. Some governments might embrace that neutrality, while others might resist it fiercely. It's not hard to imagine regulatory battles, with some countries banning Bitcoin, while others adopt it aggressively. Technology would have to evolve rapidly to support this system. Bitcoin's blockchain, while secure, has limited transaction capacity. For it to serve as the backbone of global trade, second-layer solutions like the Lightning Network would need to scale massively. Payment systems, wallets, and infrastructure would need to be as reliable and user-friendly as credit cards or online banking today. Privacy would also be a contentious issue. Bitcoin is pseudonymous, not anonymous, meaning transactions are transparent on the blockchain. If governments and corporations could trace every transaction, debates around surveillance, taxation, and personal freedom would intensify. Culturally, the shift could redefine how people view money. In the US, UK, Australia, and Canada, citizens are used to trusting their governments and banks to manage currency. If Bitcoin became the reserve currency, that trust would shift to mathematics and cryptography. Money would no longer be tied to a nation's identity, but to a decentralized, borderless system. For some, that's liberating, the idea that your savings can't be diluted by political decisions. For others, it might feel destabilizing as familiar institutions lose their traditional roles. There would also be ripple effects across industries. The financial sector, which thrives on managing currencies, derivatives, and forex markets, would shrink in scope. Payment processors and remittance companies might lose relevance, replaced by direct Bitcoin transactions. On the flip side, entirely new industries would emerge: Bitcoin custody, lightning-fast settlement providers, and cryptographic financial services. Tech companies in the US and UK could find themselves leading a new era of financial innovation, while traditional banks might struggle to adapt. The energy debate would intensify as well. Bitcoin mining consumes significant power, and if it became the world's reserve currency, demand for mining would skyrocket. Countries with abundant, renewable resources, like Canada with its hydropower, could become global leaders in mining. Australia, rich in solar and wind potential, might also benefit. The narrative would likely shift from Bitcoin wastes energy to Bitcoin drives renewable innovation as nations compete to supply clean energy to the network. But perhaps the most important question is psychological. Would people be ready to accept a money system not backed by a government, but by code? In countries like the US and UK, where confidence in national institutions is deeply ingrained, this could represent a radical cultural change. In places with histories of currency crises, the transition might be easier as people already distrust fiat systems. The success of Bitcoin as a reserve currency would depend not just on technology and economics, but on human belief, on whether billions of people could trust a decentralized system over traditional authorities. If Bitcoin did become the reserve currency, it wouldn't happen overnight. It would likely unfold gradually as more companies accept it, more countries hold it in reserves, and more people use it for savings and payments. Step by step, the dollar's dominance could erode until one day Bitcoin takes its place. The journey would be filled with resistance, disruption, and innovation. But the destination, a world where money is digital, decentralized, and borderless, would be unlike anything humanity has ever experienced. So, what if Bitcoin became the world's reserve currency? Trade could move faster, banks would adapt, governments might lose old powers, and people everywhere would rethink money itself. It's a future that brings both promise and uncertainty, and even if it never fully happens, the idea is already shaping decisions today.